Hello everyone, my name is Khan and welcome to the new video. In this video, I'm going to teach you that how you can take entry while price tap on PY and how many things you need to understand before the buy and sell. And some people get confused while price tap on PY and they don't know exactly that what criteria you should follow before the buy and sell. Generally, when price tap on PY and then we can take entry without inducement, with inducement, with order block and without order block. So in this video, I'm going to teach you step-by-step process that how you can identify trend and identification of your PY. And main thing is here to identification your lower time frame entry criteria, that how you can trade while market taking out the inducement and sometime market not taking out the inducement. So in this video, you will learn all about market entry execution in a higher time frame to lower time frame. So let's get started. This is our USD chart in a 1 hour time frame, and I received so many requests in our comment section that you need to make a video in a 1 hour time frame and 5-minute time frame combination. So in this case, we can see here we are using 1 hour as a higher time frame, and now I will show you exactly that how you can trade in a lower time frame. In this scenario, we can say that market momentum is a bullish. So when market momentum is a bullish, suddenly what we are looking? We are looking that market must recreate the structure and taken out the inducement and price tap on PY. And then we can anticipating that price looking for the continuation to the upside or market looking for the reversal, or sometime what happened, market not react from your decisional PY and react from the extreme PY. So in this case, we can say this is our previous swing higher high was created here, and this is our previous swing high, and this was a previous swing low which was created here, and market create a break of structure right here. So this point become our break of structure, and just below it we can say this was a next market momentum was bullish and market looking for the continuation to the upside like this one. When market momentum is a bullish, suddenly what we are looking for the buy after taking out the inducement. We can see here clearly that market break this structure here, and after break the structure, market must be taken out the major inducement, then we can anticipating that price trying to go higher. In this case, what happened here, market create first one is here, this is our minor inducement. If you don't know exactly that how we can identify major inducement and minor inducement, I already make a separate video on this topic, so you can watch them. Those video help you a lot to identification of the major and minor inducement. In this case, we can say this is our minor inducement here. Why? Because this one is a create below it before this break of structure right here. Once market create this one, again market trying to go higher, and this inducement convert into major inducement and market continue pushing higher high here, and this is our right now major inducement right here. What happened here if market taken out this inducement, and what happened if market not taken out this inducement? In this case, we can say here exactly if market trying to go higher like this one, so we can expect that if market taken out the inducement, then we can plan for the buy. And what happened here if market not taken out this inducement and trying to go higher? So this inducement transfer here to here until taken out the previous low, which act like a inducement right here. So generally at the current price, market create this inducement here. If market taken out the inducement, then where is your PY? Firstly, market react from the decisional PY or extreme PY. In this case, we can say here this is our last selling move before the buy is here. It means this is our PY right here. This is our PY, and we can mark this one is our decisional PY. And where is the extreme? Extreme always on bottom of the move in a bullish market and top of the move in a bearish market. In this case, we can say here start from bottom of the structure. This is our last selling move before the buy to the upside. It means this is our zone when we can expect that if market tap on it, then we can plan for the buy to the upside. So this is our unmitigated extreme PY is here, and just above it we can say clearly this is our one more order flow is here, but this one is mitigated by this pullback is here. It means we can't use this PY as a higher time frame PY for the buying perspective here. So generally we have a two PYs here. First one yellow one, this one is our decisional PY, and the violet one is here extreme PY is here. It means we have a two PYs here. What happened here? If price tap on first PY is here, then how we can react here? If market tap on this one, then we need to switch here in a lower time frame. And which lower time frame? We are using H1 as a higher time frame, then we can use 5-minute as a lower time frame. And if market create here any kind of like structure like this one, taking out this low and price trying to go higher, we can plan for the buy at this point right here because the inducement taken out here. So if market taken out the investment, we can plan here for the buy to the upside. And the next possible scenario is here that if price tap on the PY and after that what happen here? Market taken out the previous swing low is here, mean the sweep this one and break the structure here and close of it, and we can buy here without any investment because market already taken out the liquidity is here. So in this case, we don't need to wait for it to taken out the investment in a lower time frame, and we can directly buy here when market see the previous swing high or low. This is our first scenario that how we can take entry here for the buy. And the next thing is here, what happen here if and not tap on your PY and this PY is a fail, then how we can take entry here. Look at this one. Sometime what happened, plus create a structure and market maybe sometime create a lower time frame entry and sometime not create. For example, market create here lower time frame entry, and after that what happened, market push downside, and what happened in this case, the very highly chances your stop loss hit or break even hit. And after that, how you can react here. In this case, we can say market, if market again trying to go higher, if market taken out the previous swing high is here, so we can plan here for the sell for the short term till the previous extreme PY is here. So we can short term sell at this point right here because of the in a short term in a counter trend, market trend has been changed bullish to bearish, because after taking out the investment, if market trying to go higher in a first attempt, then very high chances market trend is extremely bullish. And what happens sometime, market taken out the investment and take a small pullback but not able to break the high. It means market looking for more liquidity before to push higher. So in this case, what happens generally, market pushing downside and create like this structure. So we can plan here for the sell for this extreme PY mitigation right here. So this is our zone when we can expect one more buy side is here, like lower time frame entry look like this one. So we can plan here for the buy at this point right here. So this is a possible scenario in a higher time frame to lower time frame, that how you can take entry. Now I'm going to show you exactly in a 5-minute time frame. So this is our 5-minute chart. We can see here that how market is reacting here, and we can see exactly that market momentum is still bullish here. So if market momentum is bullish in a 5-minute time frame, and we need to wait for it to mitigate the higher time frame PY first, then we can plan for the buy to the upside right here. Look at this one. If market tap on this PY is here right here, this is our higher time frame PY. It's a H1 higher time frame PY. This is our unmitigated order flow is here. Once price tap on it, then we can plan for the buy to the upside like this one. So let's see how price is react here and how we can take entry here. Look at this one. Price tap on it, and once price tap on it, suddenly what we are expecting? We are expecting that market must be changes direction bearish to bullish if market momentum is a bullish in a higher time frame. And same thing applicable in a bearish market. If market momentum is a bearish and lower time frame structure is a bullish and turn into bearish, then we can plan for the sell. And same thing applicable in a bullish market. Market is a bullish in a higher time frame, but in a lower time frame structure is a showing bearish, and when convert into bullish, so we can plan for the buy to the upside. Let's see what happens next after this one and how we can take entry here. I will show you exactly that how you can take entry while market taking out the investment and while market not taking out the investment. In this case, we can see here clearly this our previous swing low is here, and when market see the previous low, so we can plan for the buy. We can plan for the buy, just sweep the previous low and break the previous recent structure here. So this one is called last selling move before the buy is here. It means we can plan here for the buy to the upside like this one. This is our zone when we are expecting some bullishness, and where is stop loss? Stop loss should be below it right here. And where is target? Target at least the previous swing high here. So this is our final target is here, previous swing high. And also you can set based on the Fibonacci tool, the recent high low is here, like the previous swing high and low is here, means the 1.618 is here. You can set the previous set target is here and 2.618 is here. So it totally depends on you that which one target is suitable for you. Like this one, this is a previous swing high is here, and we can set and you will get almost 3.4 RR. So this is our entry here, and let's see what happens next after this one and how price is reacting here. Market continue pushing higher high to the upside, and let's see what happens next after this one. And then what happened exactly, market take a one more pullback is here and trying to push downside, and I think market hit our stop loss is here. So this is our valid loss here because we are following the higher time frame structure, higher time frame PY and lower time frame execution here. So this is a step that how you can take entry here. And if market tap on PY and create like this situation here, So we can buy here. And let's see what happened next after this one and how price is reacting here. Look at this one, price is still on your PY is here. And one more time, what happened here? Market break the previous low is here, right here. It means the structure this low and now structure is here. So the current structure is here. Look at this one. We need to focus on this one. And again, what happened here? Market sweep the previous low is here. So once market sweep the previous low is over, we can plan again for the buy to the upside, break this one, take a pullback right here, and we can buy here. And where is stop loss you can put here, and we can see the higher time frame PY is below here. So I will prefer to put your stop loss just below it. This is our little bit safer side. And if you put the stop loss just below it, this one is also safer side. But the risk reward you can see a 2-point RR, right? So that's why I reduce the stop loss to maximize risk reward. That's why. Otherwise, you can set the previous main higher time frame PY above or below the stop loss right here. And same thing applicable here. You can buy here, put the stop loss just below it. And where is target? Target, we can set the previous swing high as a target. And also we can set based on the Fibonacci tool. The previous swing high and previous swing low is here. And we can set here. We can say exactly that how past targeting the previous swing high as a 1.618 is here. So we can set the same target is here. And let's see what happened next after this one and how price is reacting after tap on it. And price trying to go higher again and again. And this process will be continued to the upside, break the structure here, the previous swing low sweep here, break this one, and we can plan again buy to the upside right here. This is our PYs here, and once market sees the previous low, we can plan for the buy to the upside. But I will not suggest you to buy in this case, because sometimes what happen, market push downside and then market take a deeper pullback to the upside. So that's why this is a not good area for the buy. Even if market taken out the liquidity, for example, if market trying to go higher like this one right here, taken out the previous low and then market went up. So we can plan for the buy in this zone right here, like this one. Okay, so this is our good zone for the buy to the upside. But in this continuation, we can say market just sweep the internal structure like this one right here and then price go higher. So the previous high is not break the previous high. That's why we are not buying here. That's why we are not buying at this point right here. And let's see what happens next after this one and how price is react here. Look at this one. This time market sweep the previous low is here and sweep the previous low is here and break this one. So we can plan for the buy to the upside right here. So this is our zone when we can buy here and put the stop loss just below it. And where is target? Target, we can set the previous swing high. And also we can set 2.618 as a target like this one. We can see exactly. This is our 2.618 is here and 2.618 is here. So we can set these two target here for the buy to the upside like this one. And let's see what happens next after this one. And market hit our take profit is here. The previous swing high is a hit here. And we can set our take profit like this one. So this is the exact way that how you can take trade here in a bullish market when market momentum is a bullish, and tap on PY, on decisional PY, and that how you can trade after sweep the previous low in a lower time frame like this one in a first entry and the next entry, and the third entry is here with inducement, and these two entry are without inducement in a lower time frame. But the third entry showing a entry after taking out the inducement. Look at this one. The structure was created like this one, taken out this one and go higher, pullback and mitigation, we can buy here. But in this case, we can see here market just trying to push downside, low sweep and go higher, mitigation, and we can buy here. So same thing happening here at this point. We can see in a first phase here. Look at this one, previous low sweep here, and after sweep the previous low, broken, close of it, pullback, mitigation, and we can buy here. So these are simple process that how you can take entry while price type on a higher time frame PY, but you need to understand in a lower time frame two type of entry is a possible. Sometime market sweep the inducement and sometime market not taken out the inducement and market trying to push higher and downside as per your plan. So that's why this is important, and you need to understand in a higher time frame and also in a lower time frame while we are entering in a position. Sometimes what happened, price not taken out the inducement and we are waiting for to taken out the inducement, and then what happened, market hit our take profit. But that time if you notice that market sweep the previous swing low or high, that's why we missed that trade. So I hope this video, this entry criteria will help you a lot. So thank you so much everyone to watching the entire video. I hope you learn a lot of new things. So I hope you enjoy the entire video, that how you can take entry higher time frame to lower time frame and what is the complete process. So thank you so much everyone to watching the entire video, and if you are new, subscribe our YouTube channel to get more regular videos related to SMC concept. And in this video enough for the day, and I will see you next video. Happy trading.